We are live tonight, coming in for a special segment talking about restructuring my structured settlement, structured annuities. We have a very special segment tonight. It's exclusive to the industry, but we're opening this information for consumers so they can also take control of their life. This will be a voiceover tonight, a little bit different. So if you're on YouTube, feel free to comment. Feel free to share and like this video. Let us know your questions and thoughts as we go along. We will also have a call-in feature available. I know sometimes it's hard to say what all you need to say. You got to type really fast to keep up. So I'm very excited about the information tonight. And I want to go ahead and, for those of you that don't know, go ahead and let you know who our company is and what we do. We're the Millionaire Portfolio Group. It's an economic consulting firm. We do several things. We are a group of expert consultants that shed light on U.S. economic issues that mostly affect the consumers, and we seek out to provide our solutions. We deliver services to consumers, private sectors, and local state governments. The Millionaire Portfolio Group Company is an insurance agency currently housing 30 carriers with the ability to provide life insurance, health services, and employee benefits to any breathing client and small business with 3 or more employees. The founder, which is myself, Shalita Hunter, I'm an investment broker, consultant, and business strategist. I provide marketing, business growth, and expansion plans for the Millionaire Portfolio Group business members. Our strategic alliances are normally businesses such as law firms, banking institutions, real estate brokers, mortgage brokers, property management companies, CPA firms, health and wellness groups. Also, education facilities. I've been having some technical issues today, so definitely let me know if you cannot hear me clearly. And we're going to keep going here. So definitely, if you have any questions or comments along the way, feel free to type them here. And for some reason, if you don't have access to the comment box, which we have heard of before, you can call in with your questions. That number is 561-331-1810. And we'll put that number on the screen also. And you'll see it up there shortly. So without further ado, we're going to bring on Ryan Connors. He's going to introduce himself and tell you a little bit about his background and what he's done as well.
Hi, can everyone hear me?
Yes, I hear you well.
Okay, perfect. So, I just wanted to, I should be able to hear everybody else, correct?
They will be able to comment. You can see their comments. I'm also going to have a calling number available, which is 561-331-1810, where they can call in. But you should see the messages on the side. I'll let you know when someone makes a question or comment.
Gotcha. Okay. So, I'm not sure how many people are on the call, but I just wanted to introduce myself, give you a little bit of industry background of where I came from, where I'm at right now. I'm not sure how many people are familiar with the structured settlement factoring industry. Pretty much the big dog in the industry, the biggest player is JG Wentworth. They have the vast majority share. They've been in business for a long time. 13 years ago, I got my start in the industry. working for a company called Imperial Finance and Trading. The executives of that company are the same individuals that started Peachtree Settlement Funding, which wound up getting acquired by JG roughly about 6 or 7 years ago. JG's actually acquired a couple of different companies since then. So I was trained and learned the industry by some of the top people in the entire industry across the board. It's a very tight-knit, niche industry, so to speak, in the Mecca for the entire industry is South Florida for the most part. I worked for that company for 2 years. I was one of the top 3 producers in the company over the 2-year period of time. I wound up resigning from that company, waited out a 1-year non-compete. And in the meantime, I set up the exact same relationships as the big companies in the industry like JG Wentworth. I set up the same exact relationships with the same investment banks and hedge funds that they use to fund their transactions. So in regards to the structured settlement industry itself, what I would be interested to learn is if anybody has any experience in settling lawsuits for a sizable amount of funds that would be then transferred and structured into a structured settlement annuity. The reason behind that is because a lot of people don't understand that, a lot of people look at their annuity contracts and they're under the impression that, they're liquid, they have cash, they can just simply walk into the bank and get a loan at any given point in time. But the fact of the matter is simply you can't. And the reason why is because annuity contracts, all of them inherently have what's called anti-assignment language. And if you don't know what that is, basically it's a statement on the annuity contract itself that says that the certificate is not assignable. It cannot be transferred, assigned, or pledged as collateral for a loan. The payments under that certificate cannot be changed or accelerated and paid before the payment due date. In addition to that, there are a couple of companies in the industry that will buy back the annuity if you ask them, but it comes with a really absurd, over the top, almost, it's not even almost, it is a predatory surrender charge, so to speak, where the insurance issuers themselves, they'll impose a 40% surrender charge. In other words,
Wow.
40% interest rate. So that's, what we have the ability to do is avoid that from happening, because not everybody's annuities, whether they put their money into it themselves from an investment standpoint, or they put the money in from a major medical malpractice, personal death, personal injury, wrongful death, or medical malpractice, when they win a very sizable amount of money, it gets put into an annuity. So rather than, getting clobbered over the head with that 40% surcharge or surrender charge, we have the ability to utilize federal and state laws to our advantage to acquire the rights to those payments at a fraction of the interest rate or that fraction of that surrender charge, while simultaneously overriding and essentially strong-arming the insurance company to reassign specific payments to us. The payees of the annuity contract, they don't necessarily have to sell the entire annuity contract. If they get $100,000 next year, $500,000 5 years from now, $1 million another 5 years from then, they could sell portions of their payments, so you don't have to wipe them out completely financially, even though 99.9% of the companies that are in the industry of doing these types of transactions, the name of the game for them is buy as many payments as you possibly can and pay and try to convince them that it's worth as little amount of money as possible. So in turn, they can turn around, sell to the hedge fund, and make a massive profit margin. I don't particularly like that, which is another reason why after, 7 years ago, I started a consulting company that helps people that are being taken advantage of in that respect. So, there's a couple of different industries, not industries, but a couple of different businesses that I have that revolve around the same exact industry, where I help people get money, but I also take care of the people that are being taken advantage of. So it's two different conversations we could really have. But If anybody's not familiar, there is a Structured Settlement Transfer Act where there's several layers of federal and state laws that actually protect individuals who want to sell their future structured settlement payments. This is actually signed into law by President George W. Bush in 2002. It was titled the Structured Settlement Factoring Transactions Act. And what it's meant is it's meant to help protect the seller. The law does this by requiring state courts to approve each and every transaction and confirm that it's happening in the best interest of the seller, or aka the payee of that annuity, and or his or her dependents. So basically, it's not as simple as just going to court and saying, hey, this is my money, I need you to sign a court order, sign these payments to this company, they're going to give me a lump sum of cash. It actually goes in front of a judge. The judge is making absolutely certain that it is in their best financial interest to do the transaction. So there's a lot of safeguards in place to make sure that a lot of fiduciary responsibility is being put in place to make sure that this is the best thing for them. The whole purpose of this call is essentially what I'm trying to do is strategize and work with personal injury attorneys that settle these types of cases. And specifically what I'm looking to do is work with clients, work with personal injury attorneys directly, not circumvent you. I'd want you, if you're interested, to work with Shalita and I, be directly involved with every single step of the process with regards to clients whom you represented, say, probably 2 or plus years ago, where you settled the lawsuit and the money awarded was structured into a structured settlement annuity. Chances are a lot of you would probably agree that at the time you set up that financial vehicle, which is the annuity, it was set up at that time and clearly it was going to work out for them in their future and be in their best interest. But as pretty much everybody on the face of the planet literally knows right now, life isn't certain. There's tons of uncertainties that happen. Perfect example being COVID. It's devastated and it has a devastating effect on all the families and the businesses nation worldwide, which in most cases, a lot of them are never going to recover from this. This in addition to a lot of people, when they get awarded these annuities, they spend well beyond their means. They think that they're going to be able to leverage the asset, which they can't because it's unassignable unless you go through this court process. And basically by mismanaging their funds, it lands them in hot water. And you also probably agree that it puts them in a lot of very serious financial trouble. And then from there, plain and simple, like I was saying before, you can't get a loan against these types of annuity contracts. So the banks, they're not going to lend on the annuity, excuse me, because the payments are simply unassignable. The banks aren't going to spend their time to learn the expertise that I have in this industry to acquire the assignment rights to the payments. And then if you go, like I said before, if you go back to the annuity issuer directly, even if they are willing to cash you out, you're going to get hit and clobbered with a 40% surrender charge. So, if we can get them the money that they need for 15% interest rate at max or less, I'm pretty sure everyone would agree that it would be probably in their best interest, and the judges do as well. So and I understand working with attorneys, because I do that every single day. I've been doing this for 13 years. I probably looked at well over 50,000 cases. I've done well over 3,500 transfers myself. So I work with not only the attorneys that I hire to represent my company, I work with the individual payees, private attorneys if they choose to hire one, which they don't. They don't have to because the judge is looking out for their best interest. But I also work with their insurance companies, the counsel that represents the annuity company. So I understand very clearly that a lot of concern for a lot of attorneys is conflict of interest. And the way that I look at it is that from the get-go, there's been a fiduciary responsibility as an attorney to look out for the payee and your client's best interests. And like I was saying before, initially when you set up the annuity, it might be working great. But now it's really looking at it from a different perspective and, reaching out to your client and saying, or, working out a deal where we would reach out to the client. There'd be full transparency on my CRM. All the calls are recorded and everything else like that. And looking to see if there would be any issue with contacting them and consulting with them to simply see, how are you doing now financially? Is the annuity still working out for you? A lot of people take these contracts and they go to the bank and say, hey, give me a loan. And they say no. And they just throw it back in their safe. So they don't even know that I have the capability to do these types of things for them at a very, very favorable rate, and help them get back into a better financial position. And since it's been a few years, since the structure's been put in place, a lot of the times it doesn't work out for people. So it's an entire process to help avoid the predatory surrender charges. It's going to provide them with a lump sum cash solution, again, without not necessarily cashing out their entire annuity stream. It could just be portions. For example, I have a deal right now. I'm buying, this is the second transaction she's doing with me. I'm buying 2 lump sum payments. That's it. I'm not touching any of her monthly payment streams at all, what she has for 30 years guaranteed plus life. So, we always want to make sure that they're going to be financially sound, but just give them the capital that they need right now. So, the other concern about probably conflict of interest would be, from a fiduciary standpoint, you would be their general counsel, once again, helping them oversee the restructure of the annuity payments to get a lump sum of cash in exchange for their future payments, to satisfy their goals and bring them out of debt. And like I said, it would be completely transparent, have exclusive access to whoever you would share with me, to my CRM, all the activity, all the notes, all the recordings of any phone call we've ever had, and then also obviously be intimately involved with all the paperwork that gets drafted from disclosure statements that follow the state statutes prior to them legally being able to sign a purchase and sale agreement, and all the other steps as far as filing a petition, proposed petition, a proposed order, the notice of hearing, and everything else leading up to the actual court hearing, which a lot of them due to COVID right now have been a lot of Zoom conferences and Skype conferences, but typically they're handled in person. But that's pretty much the gist of the relationship that I'm looking to cultivate with any personal injury attorney that deals with individuals that have settled major medical malpractice, personal injury, wrongful death lawsuits that have had the money structured into an annuity. And, I'm open to any.
And Ryan, are you there? Ryan, can you hear me?
Shalita and I both are.
I hear you now. Kind of going out. Hi, Sylvester. Thanks for joining in. I don't hear anything right now, Ryan.
Neither do I.
I hear you now. Sometimes you have to go out of the studio and come back, but I hear you now.
Who, me?
Yeah, you. I hear you.
Okay. I'm not sure what everybody got from that,
I
but
think
it was
you're
a
good
pretty
now.
long. Okay, I'm not sure what anybody got on any of that because I spoke for about 15 minutes straight.
No, we heard you. I heard you. You were clear all the way up until 60 seconds from now.
Okay. Yeah, I mean, that's what we're looking for. That's the relationships that we're looking to put in place. So I'm not sure if anybody has any questions about anything.
And Eric on the line. Do you have any questions? This is I like what you brought out. Basically, it is for any consumer, anyone that that has made a settlement, and sometimes it's for people that has these settlements, something really bad had happened, of course. But we know people. So if you know anybody or know people, like this is a great, this is a very niche industry, and basically there's no one doing this. So what Ryan is doing is giving information, putting into the consumer hand, and also giving the professionals that can help just the regular everyday people, mainstream people, do what you could not do if you was just working along with the insurance company. So basically, there's a way where, just like you said, you can totally restructure what has already been structured, because if it's been 3 years ago or 5 years ago, times has changed. Look at where we are right now. Look at what's going on right now, the pandemic. So a lot of times you need to restructure. There may be more than what was there previously. So it's just about, having a verified consultant, take a look at overview and see if what you have or somebody that can qualify for that. And the great thing is, if there's an attorney on the case, they get to oversee the entire process of that. And the great thing is they, have a trusted advisor where, it's very limited work on their part. But it's a win-win situation for everybody that's involved. And I think that's, it's a great thing. So Ryan, what would be your final thoughts?
I guess my final thoughts would be, if there was anybody that would be interested in doing this, what I would like to do is I'd propose a pilot run
Yeah.
of a certain amount of clients from any attorneys who have clients that have settled a lawsuit that resulted in a structured settlement annuity being put in place. Like I said, I'll provide total transparency to my CRM, which will provide detailed notes. Also, you'll be able to have access to all the recorded calls in the system for compliance purposes. And then from there, just so everybody understands, it is important to understand that I have a pretty high cost of funds that are allocated in expenses for originating these deals. So when you're the company that actually brings the deal to court, that's called originating the deal. It's about $5,000 per transaction, because I got to pay inside counsel, outside counsel, if it's in a different state, to represent my company. I got to pay court filing fees, administrative fee to the insurance company that issues the annuity payments once we get a court order, FedEx, and a couple of other things. Usually it's about $5,000 per transaction. So regardless of the deal being approved or not in court, we would be covering all those expenses. So we have a lot of skin in the game, so to speak. I am incredibly selective of who I actually run through the transactions. The first 2 years that I was in this industry working for a company, I had deals getting killed on me left and right because I wasn't educated well enough by certain people within the industry, within my own company, to say this will fly, this doesn't fly, this is what the judge wants to look for, this is what they don't like. I'm incredibly selective.
Right.
Knock on wood, in the past 11 years, I've never gotten a deal denied that I bring to court myself, because number one, I don't like throwing my money away. Number two, I make sure that they're on board, they understand the process. The best interest affidavit is going to be acceptable to the judge. I'm not going to talk to the kid. And this is a true story. I mean, an 18-year-old kid, I talked to him. I said, how much money do you need? He says, I need 80 grand. I said, what do you need it for? He goes, I'm going to buy an Escalade. I said, no, you're not, because I'm not doing your deal. Versus somebody that's 30 years old, they're going to buy a house and they got a realtor and all that other stuff. So I have a lot of other things at my disposal, a network of FINRA registered financial advisors, realtors, and everybody else, that we put together a very comprehensive, very super solid package that the judge takes into consideration on whether or not they're going to approve the transaction. So, but long story short is, I have a lot of skin in the game. If I have 10 deals out there, that's $50,000 my head's on the chopping block for. So I take it very, very seriously which clients I work with. So I'd be open to any structure settlement factoring deals that come to fruition. Initially, I'd offer a profit share of 33 1/3 during the pilot period only, because again, we'd be covering all the costs, assuming all the risks that are involved, which is well beyond the transaction itself with regards to assignment of payments with the hedge funds and the investment banks and everybody else on the back end. So there's a lot more due diligence we got to do. And just for everybody's edification, the industry average net profit for over a decade is $13,000 in every single. So the gross is the gross is about 18 grand. So if we have a foot in the door with a prior client and they're interested, I'd imagine the close rate would be relatively high. My personal average net profit historically has been about $36,000 to $40,000 per case. And then also another thing to keep in mind is once somebody does one of these transactions, assuming that their annuity is large enough, statistically they do on average 3 to 5 subsequent transactions in their lifetime. So if that lead would be coming from you as a lead source, you could always
so that's trail. Now you talk about the trail, following that initial case, there's also trailing involved.
Sorry, say it again.
I said, so basically you're concluding that there's also a trail involved. There's the initial reopening, and then subsequently there could be 2 to 3 other transactions, which would create trail money after that.
There could be. I mean, honestly, I would prefer not to see them do subsequent deals. I mean, the whole name of the game of what we're trying to do is fix their financial situation, have them do one deal, leave everything else intact, just get them what they need. But, again, you never know what's going to happen. You don't know the uncertainties of life. Or it puts them in a good financial situation where they open up a business and they're killing it and they want to expand and they come back and they want to pull more cash out to expand the business. Then, it's all situational. So there's a lot of different scenarios that you run into. And, there's a bunch of different ways that you can go along profit sharing options. Or simply, if it's a conflict of interest in regards to profit sharing, that might be a concern. The bottom line is that you would, as the attorney, you'd be re-representing your client, which wouldn't be a conflict. And then you'll just be involved overseeing the transaction, make sure that it is, in fact, for the best interest. In addition to you, making sure that it's going to be for their best interest as well. So
yeah, man. So all the way around the board, we have fiduciary responsibilities all the way around the board. So it's definitely always done with the first priority is for the client's best interest. So I like the way that you basically, weed out the for a good purpose or look, that's just silly. We're not going to do that. So you're basically weeding out, the client and making sure, when you dive into it, that you're 99.9% sure that this is basically a winner. That, so that's really
very
good.
selective. You got to make sure that the person has a good head on their shoulder. They know what they're doing. They're very well aware with it. I know there's a lot of companies in the industry where they'll do a deal with somebody that's got brain damage and doesn't remember one day to the next. I don't touch stuff like that. I have very, very high level of business morals and ethics, and I don't play around with stuff like that. I don't care how much money it is. I don't care if it's $1 or $100 million. I'm not going to jeopardize my reputation and my company that I've been doing this for 13 years for any one deal ever. I'd rather walk away from it. So, I mean, from here, basically, it's, if anybody's interested, let us know what your thoughts are. I'd be happy to answer any other specific questions that you might have.
Definitely. So I'll put the links in the messenger for to consult. If you're a consumer, you would want to do an overview. You can use that link to go directly to the calendar and schedule a free consultation. And if you are a professional, you're a bankruptcy trustee, you're a personal injury attorney, you can go to that link and leave us a note just to let us know what side you're on. And we can also set up a one-on-one consultation to go further in details. So with that being all, yeah, with that being all, this is a wrap, and we're looking forward to expanding the horizons here. So if you know anyone, I think Ryan did a pretty good job explaining what a structured settlement is. I had got that question earlier today. Someone said they didn't know what a structured settlement was. So thank you so much for breaking that down. So a structured settlement can come in many ways. I think for people that have them, they know that they have them. For people that don't have them, that's probably why they don't know exactly what it is. But I think most people are familiar with settlements. I got a settlement for my injury, or a settlement for a particular case, or whatever. So a settlement is normally, well, not normally, if it's big enough, I guess it would go into an annuity product. And when it goes to the annuity product, that means that client is getting payments every month from that. So I guess another settlement would be if you win the lottery. You get a choice to do a lump sum, or
that's the perfect example. An annuity is a financial
yeah.
It's a financial vehicle that pays you a specific amount of money over a specific period of time. It can be monthly, quarterly, weekly, biannually. You can have lump sums every year, 2 years, 5 years, 10 years. They have two different streams. One of them are guaranteed, which means that say if I got payments for 30 years every single month, if I pass away year 15, my beneficiaries get the last 15 years. I lived through that, and I got life contingent after the 30th year. Every single month I'm alive, I get paid. So there's a lot of different types of payment structures that I could work with. I could work with casinos and lottery winnings, as well as structured settlement annuities, as well as SPIAs, which is single premium immediate annuities, where somebody actually took their own money for investment purposes and put it into an annuity. So there's a lot of different products that I could work with.
Wow, that's amazing. So if you don't have an annuity now, you may get one in the near future. Who knows? Now you know where you can come to to get that overview, and make sure you get the get the right payments. Get what you need out of that deal and out of that contract. If you know somebody, you can refer them in. Outside of that, you can join the Millionaire Portfolio Group Strategies group on Facebook. We have more things like this, and we're going to have more things exclusive to only the group. So you will have to join to get the exclusive information. Again, that's Millionaire Portfolio Group Strategies. That is a group page on Facebook. If you're on LinkedIn, thanks for connecting with us tonight. Really appreciate it. If you're on YouTube, definitely subscribe to this channel, and we look forward to bringing more exclusive information to the consumers to help them any way possible, especially in these trying times. Brian, thank you so much for coming on and breaking that down for us. I really appreciate you.
No problem. You're very welcome. Hope everyone has a good night.
Yeah, good night.